Well, let's talk about how global markets have shaped up over the last day or so. The US markets continued in the red. We did see cuts of 1% plus on both the S&P 500 as well as the Dow. Dow now, breaching its 2020, or rather, coming very close to its 2020 recovery levels. So clearly, we're seeing a bit of a correction across the board in US indices. And even the Nasdaq was down around 0.6% in trade yesterday. So we did see even the Nasdaq take a bit of a fall there. We're also looking at the UK index quite sharply. Of course, the UK index was largely flat in trade yesterday, but keep an eye out on the UK index because the manner in which things are shaping up in the UK with regard to both inflation as well as how their currency is performing versus the dollar is something that is definitely to keep track of going forward as well. However, when I'm looking at how US indices are doing pre-market, the Dow futures as well as the S&P and the Nasdaq futures are all in the green, up over 0.5% in trade. So there's a bit of positivity coming through. In fact, the Nasdaq is up 0.7%. So of course down 0.3% in trade yesterday, reversing, or rather the futures have now reversed all of those losses in trade yesterday. So clearly a positive there for the Nasdaq, and that's piled on into Asia, that's trickled into Asia. We've seen the Nikkei up around 0.4% as we speak. The ASX 200 also up around 0.33%. We're also looking at the Kospi, which is actually down 0.33%, and both the Chinese indices, the Shanghai and the Hang Seng, both are down as well. So it's a mixed bag at the moment. We're seeing the SGX Nifty up around 0.4%. So clearly some amount of green that we are expecting to see at least in early trade today. Of course, have to wait and watch how it pans out. A couple of newsy pieces which will come through this week. One is, of course, the Federal Reserve Chair speaking at an event today, US time, which will, of course, have an impact on our markets as well as US markets tomorrow. So we'll have to wait and watch as to how that plays out. And of course, we have on Friday, our Reserve Bank of India, our central bank, talking about rates as well as talking about how the state of the economy will be, and that will really drive markets through this week. And we have, of course, the options expiry coming through on Thursday. So expect a bit of a tumultuous week going forward on the base of some of these newsy items that will come through this week. But moving quickly on to commodities, we have seen oil slip quite sharply. In fact, currently at the $77 a barrel mark. We have Brent below the $85 a barrel mark as well. Gold also under pressure, well below the $1,650 an ounce mark, currently at around $1,638 an ounce as we speak. So gold also under pressure on the back of a surging dollar and surging bond yields. Well, where are bond yields? The 10-year US bond yield now closing in towards that 3.9% mark. 3.88% is where that is at the moment. We're seeing literally 10 bips corrections on a daily basis now since the time the Federal Reserve hiked interest rates by 75 basis points for a third consecutive time last week. So we're seeing a surge in bond yields coming through. We're also seeing the dollar index making meaningful gains, but at the moment the dollar index is sitting as is. It's at 113.7 where we left it off yesterday, but still meaningful gains from that 109 mark that we left it at just immediately prior to that Federal Reserve announcement that came through last week. So clearly a lot of push across the board on that front. Lastly, of course, cryptos. Ideally, cryptos should have been under pressure, but it seems that cryptos have probably taken a sharp fall, and there's a slight correction upwards. So definitely a bit of cheer coming in with Bitcoin just about breaching that $20,000 mark. So some amount of relief on the crypto for the crypto investors, if I can call it. And of course, where indices are concerned and where especially Indian indices are concerned, we're expecting to see a marginally higher day at especially early in trade is what we're expecting based on how the SGX Nifty is doing early in trade today.